An ugly day for stocks. Nasdaq, Dow, and S&P all landing firmly in the red. The Dow not far off from its intraday low. Let's get over to Emily McCormick for a closer look at today's big losers. Emily.
Well, Shauna, a rough day is right. Just taking a look at the market action where markets settled about 45 minutes ago, we can see the Nasdaq Composite was the big laggard among the major indices today. That was off nearly 5%, 4.99%, and that was the Nasdaq's worst day since June 2020. Now, taking a look at the Dow Jones Industrial Average, that was off more than 1,000 points for the first time since June 2020 as well, or about 3.1% when we take a look at that percent basis of a decline. Now, taking a look, a deeper dive into the tech sector and the Nasdaq 100, we could see it was truly a bloodbath today. Some of those heavily weighted mega cap technology shares, like Amazon, for instance, down about 7.5% on the day. And of course, for the year to date, still seeing some major losses for that stock as well. Now down 30% so far in 2022. And then, of course, if we take a look on an equal weight basis, really goes to show that the vast majority of these names did end in negative territory during today's session. But if you're looking for relief potentially elsewhere in markets, you aren't going to find it in cryptocurrencies. We talked a lot today about the stock declines, but we should also point out that Bitcoin down about nearly 9% so far on an intraday basis. But if we look for the year to date, this is actually Bitcoin's biggest decline that we've seen since January. So really a risk-off tone was reverberating across markets here between equities as well now as cryptocurrencies, guys.
As we look for a light at the end of the tunnel and hope it's not just another train coming, what can we expect with the jobs data that's out tomorrow?
Well, of course, Rochelle, volatility has been the name of the game for quite some time now in markets. We'll see how stocks do end up trading after tomorrow's jobs report. This is going to be the Labor Department's monthly jobs report for April. And consensus economists are looking for a little bit of a deceleration when it comes to the number of non-farm payrolls added back into the economy. The number there is 380,000 that economists are looking for. And that would come after the 431,000 payrolls that came back in March. And in terms of the jobless rate, economists are looking for the unemployment rate to improve to 3.5%, down from March's 3.6%. And that would match the level that we saw last in February 2020, which was the lowest since 1969. So getting back down to those more than 50-year lows now. Then in terms of the average hourly wage number, likely to see another 5.5% increase on year-over-year basis. So still seeing those wage gains continuing to increase for a variety of workers, not quite keeping pace with the rate of inflation we've seen, with CPI up 8.5% in March. But again, still really pointing to, in aggregate, the ultra-tight labor market we have here in the U.S., guys.
All right. Thank you. Our very own Emily McCormick there.